Everyone, and welcome back to Forex Scope, your go-to channel for insightful Forex analysis, where we break down the charts to bring you potential buy and sell signals and a glimpse into future price trends. Today, we're diving deep into the EURJPY pair on the 15-minute and 1-minute timeframes. If you're looking to stay ahead of the market, make sure you hit that subscribe button and the notification bell so you don't miss out on any of our crucial updates. Let's get started and see what EURJPY has in store for us. The resistance zone is identified by a clear period of consolidation and price rejection in the upper price range. Observing the candles from November 7, 2025, 14 o'clock, Unix timestamp 176-252-4000, to November 7, 2025, 14:15, Unix timestamp 176-252-4900, we see price action that struggled to break decisively above the 177.475 level. The high of the candle at 14 hours reached 177.475 and the subsequent candle at 14 hours and 15 minutes showed a high of 177.595, but the price failed to sustain this upward momentum and closed lower. More significantly, the period around November 7, 2025, 14:30, Unix timestamp 176-252-5800, shows a notable price rejection. The candle opened at 177.545 and closed at 177.336, with a low of 177.197, indicating strong selling pressure emerging from prices above 177.384. The presence of multiple wicks extending upwards from this resistance area, coupled with a notable price drop after reaching the highs, signifies a strong seller presence and a well-defined ceiling. This resistance area at approximately 177.384 to 177.475 shows clear evidence of price failing to advance further, acting as a significant barrier to upward movement. The price struggled to maintain levels above this zone, suggesting that sellers are actively defending this price range. 176.533-176.52. The support zone is identified by a period of price indecision and subsequent bouncing within a defined range. Examining the candles between November 7, 2025, 3:45, Unix timestamp 176-248-7100, and November 7, 2025, 4:30, Unix timestamp 176-248-9800, we observe price action that repeatedly tested lower levels but failed to break through decisively. Specifically, the candle at November 7, 2025, 3:45, Unix timestamp 176-248-7100, reached a low of 176.515, and the candle at November 7, 2025, 4 o'clock, Unix timestamp 176-248-8000, reached a low of 176.52. The subsequent candle at November 7, 2025, 4:15, Unix timestamp 176-248-8900, also tested the low of 176.57. The clear repeated testing of the lower boundary and the subsequent upward movement of price indicate a strong accumulation of buying interest around the 176.533 to 176.571 level. The formation of long lower wicks on several candles within this timeframe strongly suggests that buyers stepped in each time the price approached this region, preventing further downside and creating a solid floor for the EURJPY pair. This consistent reaction to prices within this range highlights its significance as a support level. The resistance zone is identified between 177.318 and 177.276, spanning from timestamp 176-253-6060 to 176-253-6300. This area shows significant price interaction, with multiple candles exhibiting upper shadows and rejections around the upper boundary of 177.318, indicating sellers stepping in. The lower boundary of 177.276 also saw several price points converge, forming a congestion zone that repeatedly halted upward momentum. The price action demonstrates a clear struggle for bulls to break through this level, with prices being pushed back down from the upper extreme. Specifically, at timestamp 176-253-6060, the high reached 177.312, and by timestamp 176-253-6300, the low was 177.315, showcasing the tight trading range and the difficulty in breaching this price ceiling. The presence of relatively large candles within this timeframe, despite their inability to sustain higher prices, suggests a significant battle between buyers and sellers, with sellers ultimately defending this area. The clustering of price action around these levels, rather than a clear directional move, points to accumulation or distribution at this resistance. The extended upper shadows on several candles within this timeframe further reinforce the idea that this price range acted as a strong barrier, preventing further upward price discovery and indicating a potential reversal or consolidation. The area between 177.318 and 177.276 consistently acted as a ceiling for the price. The support zone is identified between 177.249 and 177.187, spanning from timestamp 176.253.3060 to 176.253.3480. This region shows clear signs of buying interest, with prices repeatedly bouncing off the lower boundary of 177.187. The upper boundary of 177.249 also acted as a temporary ceiling before further declines, but the consistent rejections from the lower end suggest a strong foundational support. Several candles in this period exhibit long lower shadows, indicating that buyers stepped in aggressively whenever the price dipped to these levels. For instance, around timestamp 176.253.3360, the price reached a low of 177.187, but managed to recover, showing buyer dominance at this price point. The area between 177.249 and 177.187 shows a period of consolidation and testing, where the price struggled to break lower. The presence of larger candle bodies that still managed to find support near the lower bound suggests that demand was present, preventing a more significant downward move. This accumulation of price action within this defined range signifies a level where buying pressure is strong enough to absorb selling pressure. The repeated interactions with this price zone, without a sustained breakdown, confirm its role as a significant support level where traders can expect potential buying interest to emerge, creating a floor for price movements. The convergence of lows around 177.187 across multiple candles is a key indicator of its strength. The EURJPY pair is currently trading near the 177.249 level, showing signs of a potential short-term pullback after a period of consolidation. The recent price action, particularly the candles between November 7, 2025, 16 o'clock and November 7, 2025, 18 o'clock, indicates a range-bound market with sellers defending levels around 177.318 and buyers showing support near 177.187. The Fibonacci retracement levels, with 177.251 and 177.274 suggesting upward momentum, are being tested. The Bollinger Bands are starting to widen slightly, hinting at increasing volatility. The tick volume, while not excessively high, has shown consistent activity within this range. We are anticipating a move towards the identified resistance zone between 177.318 and 177.276. A break above this resistance could lead to further upward movement, targeting higher levels. However, a failure to breach this resistance might result in a retest of the support zone. Given the current trading range and the Fibonacci levels, a potential zigzag pattern is expected, with the price oscillating between these key levels. Traders should watch for a decisive break of either the support or resistance to confirm the next directional move. The current price of 177.249 positions us within this consolidation, and the predicted path accounts for both upward and downward fluctuations as the market seeks its next significant direction.